most people in the world are playing the game as it's been played for all of history. And if they can control money and extract a little bit of the productivity that flows to people, then they can create a massive power and use that power to their advantage. And the more people that you're extracting from, the more power you gain at other people's expense. So most people in the world today are playing an extractive game that is really a prisoner's dilemma, with each person losing as a result of that extractive game. China is also playing that extractive game, and they're playing it in some cases better than the US, because you have a controlled society. In China, you're not going to win against a controlled society by being more controlling. So essentially what they're doing with Belt and Road, and whether it's Venezuela or any of these countries, or Russia, they're giving better terms than the US. They're creating debt traps, they're creating all the same thing, and they're giving better terms. But for China, to be able to be open currency unit for the world, that means their currency would have to fluctuate, and they won't do that because it can't in a closed market. So I have no worry about BRICS and all this nonsense. US dollar is going to get stronger. A lot of these countries are going to fail against the US dollar, and that means all imports, raw materials and labor, get cheaper in the US, and you can extend the game for a long time from the US dollar system. All parties are playing on a game board that doesn't exist anymore on Bitcoin. So Bitcoin is a cooperative game rather than an extractive game. And if you want to play the extractive game against it, you're going to eventually be repriced by it anyways. So
in saying that, transitioning a little bit, what makes you? I was listening to some of your recent interviews, and you touched on it a little bit, but you're saying that Bitcoin is going to reprice even the people that are trying to play games on the layer 2s, 3s, whatever it is. How do you square that circle with people who are saying, well, then, yeah, why would I invest in anything? Why would I do anything if I can just hold Bitcoin? What's your simple answer to people?
It's actually the most simple thing in the world, right? So if you're in the US, why would you invest in Google? Why don't you just hold cash? Because you think Google is going to have a higher return than your cash. So you're predicting your return rate, your risk-free rate of cash, and you're predicting the value you're going to create for people, and value that you're part of the value creating for people out of that. Okay, now you're in the US and making that choice, cash versus investing in a company. Why would you do that? Because you can get a higher return rate. Of course you do it. Now you're in Argentina, and you can take your currency that you know is going to be worthless you're in 2000. Google's just emerging, and you can see the Argentina peso is going to be worthless in 24 years. And you can invest it now into Google's growth and cash flows in US dollar. That'd be a pretty good trade, right? Because you'd have venture returns on top of an asset that wasn't losing value as fast as your Argentina peso. That would be a pretty good return. That's all that's happening in Bitcoin. It's the same exactly the same thing, except for Bitcoin is repricing all currencies. So the IRR of Bitcoin for the last 15 years is 45%. So that means my rate of return hurdle needs to be plus 45%, or I won't make an investment. And I can't find anywhere with an existing system, houses, anything where I can make a rate of return of 45% a year. So you would just invest in Bitcoin and just hold it. But what if you wanted to make a higher return rate? Wouldn't it make sense to do the exact same thing that Argentina, that toy example I gave from Argentina to Google? Wouldn't it make sense by building on top of the infrastructure and technology on top of Bitcoin and helping other people? And those companies are creating more and more balance sheet, or more of their revenues in Bitcoin. You're building, so you have the rate of return of Bitcoin plus the accrual of Bitcoin on your balance sheet by creating value. So we're having what we see is venture type returns on a venture type asset. Because why we're seeing it is we understand the true rate of return implied by Bitcoin. And that's 45%. And we're investing where we can beat 45%. And the only way you could beat 45% is by creating a Bitcoin company that's increasing your Bitcoin on your balance sheet by creating value. So for me, I can't believe more people can't see it.
Sorry, really quick, because I want you to explain this, because I think of the if anyone's familiar with real estate, there's the BRRRR method. The last 10 years got really famous, and I've employed this many times, of raising money and then buying the asset, buying the property, or I guess the debt, if you will. So using other people's money, getting the financing, fixing the house up, putting a tenant in, and then returning all the capital, and then you have an asset. I didn't pay anything for it. Infinite return, right? So I guess this is where I think of like what Saylor's doing. Then there's what you're talking about, which is different. It's a venture, like you said, venture capital is a company, and they're getting more Bitcoin into and holding on their balance sheet. So I'd love for you to kind of walk through these couple of things and how they kind of, I don't know, relate, or just even parse them out for people.
So they're very different strategies. If you have cheap access to capital, and you have an operating business that's profitable, then you can lever that through cheap access to capital. And if you're safe on that, especially if you hedge out some of the risk on this, you can use the cheap access to capital, and you can use the inflation inherent in what's coming to drive the higher value asset, which is in this case Bitcoin. That's what Saylor's doing, and he is killing that playbook now. And so he practically invented I think BRRRR talked about it like 2013 or 14, and that would happen. And Saylor is become a master at that. So he's using an operating business to be able to do this. I know lots of people that are doing the same thing in smaller businesses, similarly, which is actually the same thing that you just said in real estate. All real estate is a short on a currency. You're buying an asset, and you know that the currency must be devalued. And so you're taking a leverage against than an asset, and Bitcoin is a better asset, far better asset than real estate in that. So what we're doing is different, right? Some of our companies, as they become profitable and they have lower costs of capital as they become really profitable, we'll do the same thing as Saylor's doing and extend that. But what we're doing is we're building companies. We're building the new Google. Here's an interesting thing in this ecosystem too that is so different. I think I kind of intuited, but I was surprised at how fast it came. A lot of the companies don't go from seed to Series A to B to C to D as they're spending more and more marketing to get more users. They go to seed to Series A, and they're profitable, and they're adding the Bitcoin to the balance sheet every month. And so they don't have as much dilution. It actually looks like venture capital used to look like 20, 30 years ago, when venture capital could have staggering returns, because it's actually the true free rate of the true real rate of return, which, as I said before, is 45% per year. It's wild. It's wild. But those are two very different strategies.
How do more people, not real estate people, not see that playbook? Because like to me, like I didn't think about it that much. I thought about it a little bit, and then I saw Saylor doing it. I'm like, that's the BRRRR method basically. And like real estate people, that's a huge thing the last 10 years. Like, how do people not see this?
Because there's a renter in it, right? And so because Bitcoin, you can't do that. You have to have a different operating business to have a profile to hold you through the highs and lows and the drawdowns. Otherwise you'd get liquidated. That's why most people. So people are overvaluing the tenant returns because they're valuing it in fiat dollars to be able to take on more debt. And this is a far better play.
What's the biggest, it could be Bitcoin or non-Bitcoin related. So in that same vein, what's the biggest, either trend or invention or kind of discovery you've been tracking?
If you want the answer to that question right there, and you like that spicy clip, check it out here. Come on, we'll see you in there. But if you want the full interview in its entirety, all the spicy clips put together, and you're not going to want to miss it, believe me, then check that out here. Come on, we'll see you in there. Do it.